All right. Well, we'll go ahead and jump in. I know it's a couple minutes after 11. People will be running periodically through. But for those of you on the call, thanks for joining today. My name is Kevin Pappas. I'm the training manager here at 10C. I'm excited to get to introduce our speakers today. We have Peter Meyers and Amanda Green. Peter is the first vice president and senior lending officer at Farmers and Merchants Bank. And we've asked him to jump on with us today and share a little bit of his expertise to help us make sense of some of the various financing options that are available to nonprofits during this time. And then we also have Amanda Green, who's our Organizational Development Services Director at 10C. And she'll be sharing with Peter as well as narrating our conversation today and asking some additional questions. But before we jump in, I wanted to let you guys all know, and for those that are watching this in the future when it's being recorded, we have some upcoming webinars as well at 10C. Next week, we actually have 5, so there's one every single day. So on Monday, we have one on developing a crisis communication plan. Tuesday, we have a webinar focused on volunteer recognition and sharing about our Spirit of Volunteerism Awards, which are now virtual, and all the information for that. And then we're going to be doing, some of you might have already checked this out, but a virtual tour of 10C's nonprofit resource page, helping you navigate that and just getting you up to speed with all the different resources that are available through us. And then also on Thursday, we have an insurance and risk mitigation, talking about different ways you can lower your premiums as you're potentially not operating at your full capacity right now. Some of your insurance providers are likely offering reductions in your premium costs. And then finally on Friday, we're going to be doing another one on marketing and communication strategy, both now and then as you transition out of this crisis. So lots of going on at 10C. We also have our office hours that are available. They're 15-minute consultation sessions with our different experts from 10C, ranging from topics like organizational strategy and sustainability, different things like board engagement, funding support, how to engage with your donors, all across the board. I'll let you guys check it out on our website, but that is another resource that we're providing for you all, and it is free, so I'd love for you guys to check that out. So that is all of my details, but I'm going to go ahead and kick it off to Peter to introduce us and share a little about Farmers and Merchant Bank, and then we can go ahead and jump into it.
Thanks, Kevin. So my name's Peter Meyers. As Kevin said, I'm a first vice president, and I'm the senior lending officer in South Orange County for Farmers and Merchants Bank. If you go to the next slide, I'll do my quick and dirty, shameless advertisement for Farmers and Merchants. Why do nonprofits bank at Farmers and Merchants? Well, since 1907, the bank has always held exceptional amounts of equity in the bank. It keeps our clients comfortable knowing that their funds are backed by huge amounts of capital. It's a safety feature that we have always touted ourselves on. And we continue to do that for 113 years now. We have, excuse me, so we have 25 offices throughout Southern California. We focus on white glove service. We donate over $1 million to charities, nonprofits, and religious entities every single year. It's one of my best parts of my job at the end of the year to go around and hand a nonprofit a check. They are always so appreciative of it. For those of you who are interested, we processed over 2,500 PPP applications. That's the SBA's Paycheck Protection Program, totaling almost $600 million. I was one of those, spending an awful lot of hours underwriting those deals and making sure that they qualify under the SBA's program. We're now in the process of documenting all those and getting the loan documents and funding out to those clients. It's been a monumental task, to say the least. That's enough about the banks. Next slide, please. So let's talk a little bit about what are kind of the issues that each of you as nonprofit entities are facing right now in a COVID-19 shutdown. We know that churches, food banks, senior services are some of the hardest hit nonprofits right now. And obviously cash flow becomes the 800-pound elephant in the room. And therefore things like rent, mortgage payments, employee salaries, those kind of overhead type items, they really are going to loom large in your world. Some nonprofits have even had to go into hibernation. I mean, a small church that doesn't have video and technology, they can't really operate other than to make some phone calls and call their members and say, how you doing? And we'll be happy to pray for you. After school care, not a whole lot happening out there. And museums, another one that, well, you can't go congregate at museums to see our favorite artwork or natural history. Makes for a tough time right now. Next slide, please. So what are some of the solutions that you can have for your nonprofit in a COVID-19 shutdown? One of the things that I find is a huge problem for the small to medium nonprofit is that frequently they struggle with cash flow. I have a cash flow model, and I'm sure that Kevin will be able to send out this PowerPoint once we're done so that you can find this link pretty quickly. Propel Nonprofits, it's a nonprofit organization out of Minneapolis, St. Paul, put together a really easy Excel spreadsheet cash flow budget. Really simple. And all you do is basically plug in numbers. The most important part of doing one of these cash flow budgets is to make sure that you are doing what's real cash flow. And it's going to be a shock to some of you that when you do these types of budgets to say, wow, I don't just throw in my accounts receivable. No, there's like 3 levels of accounts receivable. There's booking the accounts receivable. Then there's the time it takes to collect the accounts receivable. And in some cases, it's an account receivable that never gets collected. Can't count that as cash. You've got to be able to understand what is true cash and when does it hit your bank account. Those are the kind of things that you try to think about when you're doing a cash flow budget. So once you've created the cash flow budget, next step is you're going to take a look at where are the red inks? Where are the problems in your cash flow budget? And this particular one that Propel has goes on a month-by-month basis. So you'll be able to see exactly what kind of periods are going to have some shortages in cash. Once you identify those periods, then you need to take a look at 2 levers. There's a revenue lever and there's an expense lever. And these are items that you're going to look at from a standpoint of how can I manipulate those levers to either increase my cash flow or decrease my expenses. So the first, right below the cash flow budget is the understanding your revenue levers. There's a couple of different ways that you can take a look at your revenue levers. Can a regular contributor to your nonprofit move up their contribution? All you got to do is ask. There's restricted funds. Can a restricted fund that's held on your balance sheet, held in your bank account, be freed up with just an ask? Can you go to that contributor and say, are you willing in this really different time to be able to let us make use of some of those funds or all of those funds in order to better help our cash flow? And then the one that I kind of like a lot, and I've talked about this with a number of my nonprofits, is creating a formal funding gap campaign and show your contributors just what you're up against. Ask for their help. Make it fun. Put together a whole marketing plan over a funding gap campaign and see what you can do with that. Okay, let's go on to the next slide. So that's just a couple of examples of revenue levers. There's also expense levers. Obviously, on the revenue side, you're going to be able to bump up your cash a little bit with that. On the expense side, what you're trying to do is slightly lower your expense levers. So one of the key things you can do is work with your accounts payable vendors. Will they accept an increase in terms? Now, some of them are going to be mom and pop shops because that's what you deal with as a nonprofit. Local nonprofits that have helped you with your work, they may not be able to help you as much, but it doesn't hurt to ask. It's always an ask. So if they can do 60 days instead of 30 days on your accounts payable, that means more cash in your pocket, at least on a temporary basis. You may want to call up your photocopier and see, can you renegotiate your contract terms for that photocopy machine? Can we back end load some of the payments so that in the temporary situation, we can have a little bit more cash for the nonprofit? Rent always is a big one. And there's a topic called force majeure. It's a French terminology, legal terminology for a disaster clause. You can find it very easily in your lease agreement. You either have it or you don't. And a force majeure is basically some kind of disaster that occurs. And I would call COVID-19 a disaster, that you can go back and look to see, is this something that I can discuss with my landlord to say, hey, can we start talking a little bit about what's going on? In the COVID-19, can we do some kind of payment understanding? If you have a force majeure clause and you've got a friendly neighborhood attorney who helps out your nonprofit, bring them in immediately and have them take a look at the documentation and help you strategize for how to communicate with your landlord in one of these situations. If you don't have a force majeure or you want to talk further with your landlord, maybe you can renegotiate your lease. Maybe a slightly higher rent rate and an extension of the terms of your lease in exchange for some level of rent abatement for 3 to 6 months. One thing that I want to make sure that everyone understands on the call is that you do have a bargaining chip as a renter. Most localities have said you cannot evict, you the landlord cannot evict a tenant in this COVID-19 period. And some of them go as long as 12 months. That's a bargaining chip for you to go back to your tenant and say, hey, can we maybe renegotiate our lease a little bit? Really important to think about, okay? Next slide, please. So the last resort, and always the hardest part, is looking at employee reductions or employee salary expense reductions. How do we go and attack those? Don't just look at simply cutting people. Don't just look at your personnel department and say, okay, first person to go is my HR department because it's the easiest to cut. It may be easy to cut, but look out for labor laws. Think about other ways to cut your salary. Can you cut your employee benefits a little bit? You will find that most of your employees would rather lose some of their retirement contributions or health savings account contributions rather than losing their full salary, guaranteed. Rolling furloughs are another way to look at how to cut some salary expense. Stagger your employees and have them take a week off unpaid, but make sure you stagger them so that you're still keeping your nonprofit up and running. You can look at reduction in hours for the entire staff, take them from a full-time to, a 30-hour-a-week type of program, and do it for the entire staff. The last one is an interesting one that I've found a couple of my nonprofits have already exercised. These are forward-thinking executives who say, you know what, I understand it's a tough time. You do a leveling of salaries. And let's say your highest paid employee, you're the executive director and you're at $150,000 bucks. And you take everybody on your staff down to $45,000. Yeah, it's a huge cost for you as the executive director. But for some of your base level employees who might be at, say, $50,000, reducing to 45 says, hey, we're all in this together. They're still going to feel the hurt with just that $5,000 in reduction off their $50,000 bucks. But everybody's playing in the field. Kind of makes sense? Next slide, please. So a couple other things that nonprofits should take a look at. Refocus on your mission statement. Over the past couple of years, we've had pretty good times in our economy. Maybe we've branched out in our services for our nonprofit. Take a look and see, have you branched out a little too much? Cut the less efficient programs. Make sure you're relying on your board members. Make use of them as much as you possibly can. As Amanda and Kevin know, I am working my tail off here at Farmers and Merchants Bank, but I'm still here trying to participate in the 10C programs, volunteer group, and then doing this webinar. I mean, it's just stuff we've got to do. Get your board members over involved. Please don't forget to make your payroll tax payments. Board members can be held personally liable for payroll tax payments. So make sure you're protecting your board members. They're key people. And above all, keep communicating with your staff, your board, your contributors, in other words, all your stakeholders. Okay? Next slide, please. So what are some of the financial solutions that you can look at for your nonprofit? You've all pretty much seen the SBA's programs, the EIDL, which is currently on hold, as is the Paycheck Protection Program currently on hold. But Congress is looking at right now, there was some negotiations late last night between the White House and the Democratic members of the House to say, hey, how can we get everybody on board? Please, know that your government is trying to work for you to get these things reinstated and additional funding put in. The EIDL, I think, is one of the best programs for nonprofits. It's $10,000 as a grant, free money in 3 to 5 days. And then there's the additional low interest rate loans over multiple years. The Paycheck Protection Program, also great because of the forgivable principal amount, but the paperwork is going to be a lot more difficult. Principal's forgiven if you can prove that you retained all your employees. There's a high burden of proof with that Paycheck Protection Program. Make sure you're fully aware, because if you can't fulfill that burden of proof, you're going to have a loan. Fortunately, the loan's only 1% interest, but it's going to be basically amortized out over 18 months. You get 6 months of payments deferred, but then you're going to have 18 months of pretty high payback. Just understand what you're getting into with the PPP program. And then a program that maybe not quite as many people know about, this is another one of my volunteer efforts. I'm the Chief Credit Officer in Orange County for the California State Guarantee Loan Program. It's run through a financial development corporation in Santa Ana, and they still have money to lend because all they provide are strict guarantees. So banks like Farmers and Merchants, SunWest Bank, Opus Bank, City National Bank, various banks offer the state guarantee program. It guarantees to the lender 95% of the principal loan amount. At 95% guarantee, your rate is prime plus 1%. Pretty low rate. You do have to pay a guarantee fee of 2.5%, but loans can be for up to 7 years. Good way to help your nonprofit. And you can look at that state guarantee loan program. It's run through the iBank at the state of California level. And then the last piece that you can look at is if you have current loans with your bank right now, look for potential modifications from your current lender. Mostly what you're going to find is you're going to have the maximum of 3 to 6 months of relief. And if we go to the next page, I'm going to share with you something top secret. This is actual regulatory guidance to banks from the FDIC, the OCC, and the Federal Reserve. Those are the regulators who monitor the banks out there in the United States. Banks are highly guided to work with their clients during this COVID-19 period. And I've highlighted basically the key questions here. These are FAQs that were put out late last month that say you really should work with your borrowers. And you can do things such as deferring payments, skipping payments, and putting them on the back end of a note. You can look at re-amortizing your loan payments. Let's say that you have a 10-year note with a 10-year amortization. Perhaps that can be turned to a 15-year amortization with a balloon payment at the end. Those are all acceptable items that can be done through your bank. And the bank will not get criticized for making these modifications. What banks don't want to do is that on question number 4 there, troubled debt restructuring. Banks don't want to get into those. So if you ask for something like an interest rate reduction, if you ask for forgiveness on loan payments, you're going to be turned down. Just flat, I'm telling you right now, you're going to be turned down because the banks don't want to have TDRs on their books. But you can certainly ask for modifications, as I previously mentioned, taking and deferring a loan payment, putting it out on the back end, re-amortizing, those kinds of things are absolutely within the purveyance of banks. You just have to communicate with your banker. Show them your pain, and they can look to work with you. So with that, I'm going to turn it over to Amanda to say, have you got some questions? And then perhaps we've got some questions from the audience as well, too. All right.
Thank you, Peter. This was a really helpful summary to just give a sense of everything that's going on right now, the options that various nonprofits have during this time. It's much appreciated. We did get a question from the audience, and I don't know if this is something that you know the answer to or not, but essentially the person is asking, how long would it take for an organization to get notified of the status of their loan?
Good question. So basically what happened was the banks got inundated with these PPP applications. And most of the banks, what they did was they took a client's application and input it into the SBA system. They may have done a quick underwriting to say, did the client provide some payroll information such as W-2s and W-3 information. And as long as they had, as I call it, fog a mirror, as long as you had a sufficient data in there to be able to say that the bank can make a decision, they were going ahead and inputting that loan into the SBA system to get a loan number. And some people may have heard the term from their banker, an E-Tran number. That's the SBA's method, electronic method. The bank goes and submits a request into E-Tran and gets back a loan number. That means that particular borrower has funds reserved for them as long as the bank turns around and funds within 10 days. It's really hard, I know, at the large banks. They are struggling trying to communicate with their clients. Mostly what's going to happen is that the bank is going to just show up all of a sudden on your email or with a phone call and say, I've got loan docs, you need to come in and you need to sign now. And you're going to find it's a really quick rat race because they've got to be able to fund these. Because the first round of funding stopped as of Thursday morning about 2 a.m., you can count 10 days from yesterday as the worst case scenario that you should have heard from your bank. Does that kind of make sense?
Yeah, definitely. And what have you seen so far in your 2,500 that you had in terms of the applications? What percentage of those have been notified already?
So we have been able to be responsive to our clients. I get probably 30 to 40 emails a day. Some of them are from clients who are emailing me every day. What's my status? What's my status? I try to respond to as many as I can. Some of the ones that are emailing every day, I'm sorry, they're not going to get a response. All I can do is try to placate them and tell them, look, we're trying our best. We've got 750 employees. We still have to run a bank as well as run this PPP program. So I can tell you that as of an hour ago, we already had, at just my branch alone, 35 sets of loan documents come through that we have turned around, sent either an email or a phone call to the client saying, we strongly recommend that you use DocuSign. And then we go back to our loan documentation group, and they send out an email with the DocuSign documents, which is the fastest way to get the funding complete.
That's fantastic. And like you said, it sounds like, particularly being a community bank, you really do have the bandwidth and the ability to be responsive to your clients. So that's exciting.
We're a little more hands-on.
Yeah, definitely. One thing I did want to ask a little bit more about, I would imagine that folks on this call probably have gotten a good amount of information so far with regards to the EIDL, the PPP. We've been hearing a lot about those, but would love to just hear a little bit more recommendations, insights, guidance around the application for that California State Guarantee Loan Program. That's just something that I haven't heard too much about, and I think it would be interesting to learn a little bit more.
Okay. So the actual nonprofit group that is involved with this, there are 7 of them throughout the state of California. In Santa Ana, it's called the Financial Development Corporation of Orange County. And you can Google that and find them fairly quickly. A gentleman by the name of Michael Acasio is the executive director and CEO of the Financial Development Corporation of Orange County. And what they do is they coordinate. You can send an inquiry through them, and they will then farm out your potential request to various community banks that are out there. Please know that if you're a Bank of America, a Wells Fargo, a Chase Bank, they don't participate in this program. So you would end up being farmed out to a smaller community bank. About as big as they get is one like City National Bank. I believe Bank of the West is still doing some state guarantee loans as well. But they will farm it out, and those bankers are going to want to have some kind of a deposit relationship along with your loan request, just so you know in advance. But the bank underwrites to their own standards and then says, based on the fact that we're getting a 95% guarantee from the state of California, perhaps we can relax our debt service guidelines. Perhaps we can relax our collateral requirements. Perhaps we can relax the time in business of that borrower. And all nonprofits are eligible under the California State Guarantee Loan Program to apply, with one exception, and that's houses of worship. They can't do those. But anyone who is doing just normal nonprofit stuff is welcome to apply. So it's a great program. Like I said, there is a 2.5% fee on the guarantee amount. So if you ask for $100,000, the guarantee amount is $95,000. You're going to pay a 2.5% fee on that $95,000. It can be included in the loan proceeds, so you're not necessarily writing a check right away out of it. So it would slightly reduce the net amount that you get. That kind of help?
Absolutely. And we got a question from someone in the audience regards to the California State Guarantee Loan Program. They're asking, do we anticipate that this program will be available 6 months from now if organizations didn't want to necessarily take advantage of it at this time, but particularly, as a cushion later on in the year? Is that option going to be available?
I can tell you that the state guarantee program has been around for 46 years and it
Oh,
hasn't
wow.
gone away. So I would say the answer is, yeah, they should be around. These are different
That's good
times.
to hear.
I'm just gonna warn you, these are different times, but I think they've had a track record of being around, and I believe the state would continue to back the program.
Yeah, absolutely. And I'm sure it's being accessed more now than ever.
Mhm.
I can only imagine, particularly as folks have, again, probably are just now hearing about it, even though it's been around for such a long time. So
Absolutely.
great. One other thing I did want to ask about that we didn't touch on was lines of credit. I know that's an option that some nonprofits have been looking into, whether it's opening up new lines of credit or increasing their lines of credit. What have you seen around that, and what recommendations or insights do you have to share with us about it?
Lines of credit are, for a bank, the riskiest level of lending, because we don't know how much you're going to borrow. So we have to make a commitment for the maximum amount of the line of credit, even though you don't borrow it. And then, of course, we have to continue to monitor it on a regular basis. That being said, lines of credit are great for the nonprofit that's looking to have short-term cash flow needs and want it on a revolving basis. So the line of credit allows the nonprofit to borrow for a short period of time based on that cash flow budget that I talked about earlier. Perhaps you can see in your cash flow budget a period of 3 months leading up to a big event that you know is going to provide you with a significant amount of money. You can borrow during that 3-month period, and just make sure that once you have that event and the cash flow rolls in, that you pay back on that line of credit. That's really key. That's what the bank is looking for, to say, are you properly managing your money? Are you properly managing your cash flow? The good thing about the California State Guarantee Program, they can guarantee lines of credit, and they can do it for up to 7 years as long as the bank structures it correctly. And that 2.5% guarantee fee is assessed on the amount of the line of credit. So if you have a $100,000 line of credit, once again, the same thing, $95,000 potential guarantee, as long as the bank prices it at prime plus 1, then you're going to pay a 2.5% guarantee fee. But that's only a one-time fee. Not every year are you going to pay that 2.5% guarantee fee.
Okay, great. That's really helpful. And we'll definitely make sure to get some information out to the group about the California State Loan Guarantee Program. It seems like that could be a good potential option for folks, particularly as we're waiting to hear about any new legislative updates regarding more loan opportunities for our nonprofits here.
You bet. And they're still lending. They are still lending.
Fantastic. And another question that we've got is there any historical data available or something that we can, look to that will help us kind of get a sense of how things are going to go back to normal in terms of kind of, from the financial aspect, the economy, the philanthropic community? It's like we're expecting you to be a clairvoyant here, Peter.
You are out of luck. I'm going to punt that one right back to you and Kevin. It's really hard right now. I'm looking at my 2 churches that I contribute to on a weekly basis. I have not stopped, but I'm not the normal person. Fortunately, you're seeing me wear a shirt and tie. I am in my Farmers and Merchants office in Lake Forest today and have been all through this program. And fortunately, my pay has not been stopped. So I feel I have a responsibility to continue those contributions. But trying to say when this is all going to recover, boy, it's the same thing. And it's the reason why you hear the president talk about all the time, how fast can we get this economy back in gear? And he wants to push it. Well, we have a disease out there, a virus out there that will run rampant if we're not careful. And so time frame, that's for the medical guys. That's way beyond my pay scale.
Absolutely. I'm trying to see if there's any other questions from the audience that folks wanted to ask. This has been really, really helpful. And I think it's just good for us to be aware of the different options that are out there, kind of beyond, soliciting new grant monies, loans that are available through banks and whatnot. Are there any other questions from the group or anything else that, we didn't touch on, Peter, that you're just thinking of now?
I'm happy to answer questions down the road. I'm sure that if you route your question through Amanda and Kevin, they'd be more than happy to forward it on to me, or you can go to fmb.com and you can look up the Lake Forest branch, and my phone number and my email is all in there. I'm open to everybody.
Thank you, Peter. And yeah, maybe we can send that out, Kevin, just with Peter's information if folks have questions. I'm sure that would be really, really appreciated if you don't mind, on top of your 30 to 40 emails you've been getting every day from people asking you questions.
I'm happy to do it. I can't promise that I'm going to get back same day to everybody, but I do really try hard to get back to everybody.
Absolutely. It looks like folks are saying thank you. Again, we're here if we have any other questions, but I felt like this was really comprehensive, easy to understand, and I hope everybody found this to be valuable. And Kevin, did you have any other thoughts or comments?
No, just thank you so much, Peter, for taking your time. It really was. It was so comprehensive, easy to follow. And for the group, yeah, I'll make sure to send this recording out to you as well as Peter's email. That's really kind of you, Peter, to be willing to do that. So thank you.
It's my pleasure.
Thank you so much, everyone. Thank you, Peter. This was amazing. We appreciate you so much, and look forward to continuing to lean on you for some of the expertise in this area. So thank you.
Thank you. I hope everyone stays healthy.